It's Trading Tip Tuesday here at Brave New Coin. I want to talk about exchange flows today, something that's getting increasing visibility and transparency thanks to places like CryptoQuant, Glassnode, and a few others. The big, important, bold caveat here is if you aren't monitoring these wallets yourself, you have to be highly trusting of the monitors you are getting data from, because you will usually see a mixture of signals from places like Whale Alert, CryptoQuant, Glassnodes. Sometimes they're all incorrect, sometimes one of them are correct, but it's always best to take them with a grain of salt collectively until you can be absolutely sure the data you're getting is accurate. So what do I mean by exchange flows? Well, because of the publicity of the ledgers, the fact that they're public and anybody can view them and monitor them, we are able to see, especially for BTC and ETH, very large coin flows. We can monitor that per block. We can say, okay, what's moving and where, and then from there you can say, where is it moving to and from? So in general, and I've said this before, but if you move coins to an exchange, just think about personally, if you move it from a cold wallet to an exchange, you typically don't do that to buy more coins. Now, there are some exceptions to that rule. If you're lending, if you are participating in DeFi in some way, that muddies the waters a little bit, certainly. Less for BTC. BTC is probably the purest example of you can trust the flows one direction or the other. ETH, it gets a little bit more murky because of DeFi, and all the DeFi stuff is completely murky because you can move that around for many reasons to multiple exchanges for 10,000 reasons. So it's a little less one-to-one, but I just pulled this up today to show you what you see in general. We have one account saying 12,000 BTC was moved. We have another CryptoQuant saying 14.6 was moved in the past hour. Somebody else from Glassnodes, using Glassnodes data, is saying 9,000 BTC has been moved in a single transaction. You can see a little bit more on the data there, so it probably matches closer to the CryptoQuant value. But again, reiterating the point that this data isn't always completely accurate depending on who's looking at it. So it's encouraged to do some digging as far as what's going on. A lot of the wallets tend to be mislabeled on a lot of websites as far as this is an exchange wallet or this isn't an exchange wallet, or is this an internal transfer? A few days ago there was a lot of hype about some Gemini inflow, which may or may not have been an internal transfer from cold wallet to custody. That's where things get murky, where some corporation is buying BTC and it moves from an exchange cold wallet to a exchange custody wallet. The point of all this is, if you see inflows, it's bearish. If you see outflows, it's typically bullish. These are typically people who are long-term holders. If you're buying this quantity of BTC, it's probably not many people. It's probably just one whale. Essentially what we're doing here is we're whale watching. We're looking at who's got all the money. Where is it sitting? What is it doing? Another example of this was the ICO treasuries. And I talked about this many times over the past few years, but you could see this happen in real time. It feels great. ETH ICOs were great because it sucked up all the supply, and that's also ultimately what this comes down to, supply and demand. But ICO treasuries sucked up supply in 2016, 2017. Price went crazy, and then the honeymoon was over, and all of a sudden all these ICOs had all this ETH that they have to convert to USD in order to pay for the business, right? Or capitalize on whatever. And so what you have is just this slow bleed of treasuries. And this is something you never want to see if you are bullish on ETH, on BTC. I look at this Bitcoin treasury site and I get PTSD from the ICOs on ETH. Less fickle than ETH ICOs, let's be clear here, but still, nevertheless, at some point, much of this BTC will be sold into the market. Maybe it's 2 years from now, maybe it's 25 years from now. But back to the flows discussion, it's important to know who's selling why, how much. Are they selling half on a double basically to capture the gains and just ride it out? What are they doing with it? The Mt. Gox trustee, something we've heard very little about recently, just because there's been other news that's been bigger. But when this happens, that's a significant amount of BTC that's going to waterfall onto exchanges directly. So that's going to be an inflow of BTC that the market will either have to absorb the selling or price will go down. That isn't to say all of this will be sold, but it's actionable trading information that you should be paying attention to. And the two big ones are obviously MicroStrategy and Tesla. Now, Michael Saylor seems to be deep down the Bitcoin maxi hole, so it's unlikely he'll be selling anytime soon. But these others, eventually, again, they're going to be selling, and it's worth paying attention to that. If we zoom way out and look at BTC balances on exchanges, this is Glassnode. You have to have a premium account to get the up-to-date data. I have a CryptoQuant account to check that out. But the point being here is it's always good to look at the flows, look at the back testing. How did the inflows and outflows look versus price? The other big one that's obvious is the November 2018. Price was just sitting sideways for several months, and then all of a sudden we have this big inflow, price crashes. It's one and one that happens together. Price starts to go down, more people, miners specifically in that case, start depositing, and price goes down. So if we look at March was kind of the peak at around 3 million coins on exchanges. And zooming into more recently using the CryptoQuant data, since March, coins have been removed from the exchange, just marching. Now we're at a low of 2.3 million, something we didn't see that dates back to 2018 numbers. So it's hard to be macro bearish when we're seeing more and more treasuries and corporations and hedge funds and whoever just suck the supply off the exchange. If it's not on an exchange, much harder to sell. If it's in a cold wallet, much harder to sell. So the micro events like the Gemini information or misinformation, disinformation, where price moved is valuable if you're day trading. If you're a hodler, watching these reserve flows is extremely important to see what's the general sentiment of the world here, right? Like, are people buying or are people selling? That's what you need to know. Where's it going, right? That's the other question for flows. GBTC is a big one. In BTC's case, they have 650,000 BTCs at this point, 655,000. Obviously, the GBTC premium or discount is another conversation, but all this is just sitting here. It's being sucked up, right, into GBTC. If they start selling, then flows to exchanges will likely increase, and we'll see a problem there with price. It'll be bearish, right? It's pretty likely that if selling starts at any point in time here, it'll be bearish. If this converts to an ETF and starts to see inflows into the ETF, it'll probably be bullish for price. I mean, it's really kind of that simple. ETH exchange reserves at a 1 year low, just pushing lows. ETH is a little different again because we've got that yield farming component, and you can do stuff with it other than BlockFi for BTC. ETH you can AMM, you can do all sorts of stuff. So is it sitting in ICO or not ICO? Is it sitting in AMM, automated market maker stuff? It has a job that it can do other than sit on an exchange waiting to be sold, which is fine, but it's just important to know that. Obviously, the Grayscale ETH fund has continued to absorb ETH. The ETH 2.0 contract has continued to absorb ETH. So all that represents outflows into anything that's not an exchange. An exchange is just used to sell coins. Just think of it like that, because that's how it happens. Here's that ETH 2.0 contract, 3.56 million there. There's 3.17 million in Grayscale. And if we look at total ETH locked in DeFi, there is around 10 million ETH there. So there's around 16 to 17 million ETH that is either locked up in some way or has a job that doesn't solely rely on being sold on the market. So the higher that number goes, the higher price typically goes. Supply and demand, it's really that simple. Link is another one we can look at. Link exchange reserves have dwindled over the past year. They've risen a little bit recently. So it's another coin that's worth watching, that we have reliable data on as far as what's going on here and where price is going. A lot of people pay attention to stablecoin flows as well. I pay less attention to the flows and more towards the minting and printing. If we're seeing minting and printing, Tether obviously had a lot of headlines around this, but if we're seeing minting and printing, that typically indicates extremely bullish sentiment as people are on-ramping into crypto. It doesn't typically suggest a flight to safety if we're minting stablecoins. The net flows make less sense to me than just watching the total exchange reserves. If we turn off price here, stablecoin exchange reserves are massive. Stablecoin mints broke enormous levels. So this inflow to me represents bullish sentiment, bullish mentality. You typically don't send stablecoin to an exchange unless you're going to buy stuff, right? So people are minting stablecoins, whether it be Binance, which is minting a ton lately for the new swaps they have. Maker's raising its debt ceiling dramatically, so there's going to be a lot more DAI floating around. Obviously, Tether prints are insane, and USDC prints continue at a rapid pace. So collectively, that's what you want to see: outflows of coins from exchanges and inflows of stablecoins to exchanges. And then lastly, just talking about this real quick, if we look at the HODL wave, which is another flows metric, the orange colors here are coins that were moved recently around that date and time. And the blue up here is coins that haven't moved in 10 years or more. So just hitting that point home, if we shut off some of this stuff and we focus on a specific level, if we look at coins that were moved recently, again, using the mentality, coins aren't moved to an exchange unless they're being sold. And what this is showing is once we hit basically 50% of the total coins on chain that have been moved within the past 6 months, typically that indicates a local high in price, which makes sense because you usually don't move coins unless you're selling them. We can move coins to custody and all sorts of stuff, but in aggregate, what's going to really move the needle is people assuming that highs are close or people ready to realize gains. So zooming way out, looking at this in aggregate, we can see, okay, 50% is the line where historically that's been the top. That's been the top or close to the top. So we're currently a little less than, so let's say 35% as far as coins that have moved in the past 6 months. So when this gets really, really excitable, it typically represents an all-time high in price. So it's information like the flow stuff that I use to help guide the holistic fund on Enzyme. We currently have an ETH BTC USD long short non-custodial copy trading. It's basically what it is, portfolio management. You can see all the trades I made when I go back to cash, when I buy crypto. They'll soon have a blogging component where I can lay out week to week what I'm doing. But this chart specifically is highly important for gauging euphoria, FOMO, when the market en masse is telling you, okay, the top is probably here. So let me know in the comments below, what do you think about flows? Do you care? I know some people that don't trust TA, don't trust anything other than flows. I'm in the middle. I like flows for like the micro events. They're kind of like news events. I like zooming way out though and looking at, what are the reserves doing on exchanges? For me, that's the big thing. So like, comment, share, subscribe, and happy trading.